Hey folks, it's Brent with the Downing Group. This week we're going to talk about what's going on with mortgage rates and the lending industry. So, welcome back to the channel. I thought I would bring in a special guest. We've had him on before, maybe 6 months ago, Mark Smith, one of our preferred lenders with network funding, and just ask him what is going on with mortgage rates, what's the outlook, what can we do to mitigate that higher cost, and maybe some pro tips on what to do when looking for homes if you are getting a mortgage. So I want to introduce you once again to Mark Smith. Here he is. Mark, take it away.
Thanks, Brent. I appreciate you letting me have a few minutes to talk to your clients and customers about rates and the market that we're living in right now. Obviously, everybody knows that interest rates have gone up over the last really year, and they've gone up quite rapidly. A lot of that has to do with the fact that inflation has increased significantly. So in order to control that, the Federal Reserve has tried to come in and raise the Fed's funds rate, the short-term interest rate, over a really relatively short period of time, and they've taken pretty substantial rate increases, as much as 75 basis points at the last few meetings that they've had. So what's happened is they're trying to slow the pace of the economy down in order to control and lower inflation. And that just takes time. So one of the things that from the rate market is when all of this is happening and these short-term rates are going up, it's causing interest rates on mortgages to go up rapidly as well too. The thought process is that once the Fed intervention kind of is over and they stop raising the short-term interest rates and they kind of get inflation under control, is on the backside of this, you'll see interest rates come back down. Now, they're probably not going back down to the high twos, the low threes of the COVID years, but they'll probably come back down somewhere in the mid fours is what we're hoping, which will be, historically still a really, really low rate. Now, that might be somewhere in the next, 12 to 18 months from now. A lot of data still has to come in to kind of see where inflation stands, employment stands, and those kind of economic factors that weigh in on what interest rates do. But, if we get to that 12 months from now, the people that are buying homes now, it's still a great time to buy because they can still buy a house, get the house that they love, even though they're on a higher interest rate. Hopefully 12 months from now, 18 months from now, they'll be able to refinance, which will, again, they'll be in the house that they wanted. They'll only have had to pay that higher interest rate for hopefully a shorter period of time, and then they can refinance and lower that payment back down to keep the payment in a reasonable level from a budget standpoint. But it also helps too, because if home values continue to increase, at least you got in to a house now when, before home prices went up even more. Because theoretically, if you start seeing interest rates go back down again, you're probably going to see home prices go back up. So there's, now's probably still a really, really good time to buy, even though rates have increased. Another things that, we're getting into a market now where buyers are able to get the seller to participate sometimes with, closing costs and things like that. But there's a program now called the 2-1 buy down program that will allow the seller to participate in helping the buyer buy down their interest rate. So their first year, their interest rate is about 2% lower than their regular rate that they locked in. And then the second year, it's 1% lower. And then it goes up to that higher interest rate the third year. So if, like we were talking a few minutes ago, if rates come back down in the next 12 to 18 months, you'll be able to refinance into a lower rate before that interest rate goes back to the level that you originally started at. So there's some things that we can do to make the pain of higher interest rates be a little less burdensome in the market and still allow you to buy the home that you want. Another good thing that just came out is the conforming conventional loan limit just got increased to $726,200. So that was just announced today. So any loan that's 726.2 or less will be considered a conventional loan or a conforming loan, and anything above that will be considered a jumbo loan. So Again, great time still to buy. If I can help you with anything, please reach out to me. You can reach me at 803-920-8914. And again, my name is Mark Smith with Network Funding. You can also go to my website at www.nflp.com/Mark Smith, and you can apply online as well too. Thank you very much.
So thanks for that great information, Mark. And we appreciate you and being willing to come on and share that news with us. And hey, if we can help you in any way with buying or selling a home, we at the Downing Group would love to hear from you. You can call us on the info below or DM us on our Facebook page. Have a great week.